There is an increasing consensus among the analyst community. What we have on our hands over the last 48 hours indicates that the analyst community, investment analyst community in Nigeria have an agreement, as it were, that the announcement by the government 3 days ago to further liberalize Nigeria's petroleum sector. It was a welcome development, but there's a caveat. United Capital today says it's good, well, a removal of subsidies, quoting, a good step with a promise, but has implications for the markets. What will happen to the financial assets? Stock market going up. That is the good news, and you heard that earlier on. But what happens to the FX market? That's where the devil is in the details. But if you look at where the road we've traveled since the new president and his administration took office, President Buhari had been steadfast. He says no to naira devaluation. He's always been on the same page with the central bank saying no to naira devaluation. But the president hinted that he expects the central bank to make some adjustments, as it were, in the foreign exchange market management. The vice president a few days ago made a similar statement, and he says, quote, the need for substantial review of the current FX policy. Is this a change in mind, a hint that the Buhari's administration is thinking perhaps there's a need to change or let go of some rigidities around the FX market? What we're hearing right now is that the next monetary policy committee meeting of the central bank on May the 23rd and 24th will decide, most likely introduce a two-way regime of foreign exchange policy in Nigeria. We're a few days away from that. We'll see if the words on the street is what will the central bank, 11 men, will decide on the 24th. Let's get Wale Olusi from Afrinvest to talk to us, weighing on this conversation. Wale, thank you very much for coming through on the program, research analyst at Afrinvest.
Good morning, Boatin. Pleasure to be here.
Thank you so much. On Twitter this morning, we saw the result of what your organization pushed out, Afrinvest Research, put out yesterday. Talk to us about how Nigerians have decided whether a yes, whether a no, or indifferent. What's the percentages?
Yeah, we quickly look at what the Nigerians on our Twitter account were looking at based on the recently announced decision of NNPC, of course, the Nigerian presidency. And of course, our respondents, the poll shows that about 41% of them are very happy with the decision of the Nigerian Petroleum Ministry to, partially deregulate the, oil and gas, downstream oil and gas sector. About 26% of them, they are saying no, but another 30-something% of them, 33%, were indifferent about the result. Now, the funny thing about that is that we also checked a similar poll by a popular blogger in the country, because we are thinking that perhaps the majority of our respondents are, a little bit learned. And of course, this popular blogger, he has a more diversified, respondent. Over 71% of the, respondents, they are actually very much happy. They were voting for a yes, that this is a step in the right direction. And of course, the remaining amount of people are either no or undecided.
A very interesting overview of what's been going on the street, what Nigerians want, what's on the state of their minds. Thank you very much for bringing us up to speed there. We have a few minutes left on the program. I want to share your views as far as the FX is concerned. From all the analyst community, your community has been talking about, it looks like this guided petrol deregulation, the key issue will be the currencies market. The Nigerian government, without saying it through the front door, the NNPC, the central bank, can no longer carry the burden of providing subsidized currency to petrol importers. So they say, go outside the door, find the money, bring in the product, we will regulate it. So this has pushed the burden now into the FX market. Look at what happened in 24 hours. Naira dollar went up on the street.
Yeah, I mean, Boatin, our own stance on this. We have been in favor of the fact that the CBN should do something about the current FX rate in the country. And what has happened in the last 24 hours with the NNPC asking marketers to go out on the street, look for wherever you are going to get your FX. This is, a technical evaluation of importation of crude oil, as far as we are concerned, with a price of about 285 according to the press release. We think that that will mount pressure on the parallel market of the FX market. So we are not surprised about what happened yesterday. We only think that this is a signal that perhaps the monetary policy authority will probably take a major step, because with this in place, the petroleum price is going to be subjected to a lot of pressure. I mean, volatility, if the issue about FX is not dealt with. The question is finding a fair value for FX. We are not sure how they arrive at the 285 if parallel market rate is selling at about 322. So we think the CBN making a major move on FX to arrive at a fair price for the Naira will be a major step as well, apart from what the NNPC have done in really resolving the problem. This is like, taking care of one part of the, problem. Of course, the other part of the problem that we are really looking up to is the CBN taking a major call on the FX.
Yes, what the word on the street, some sources have said is that May 24th, the next monetary policy meeting, the central bank will go for a two-way FX market.
We don't doubt that. We think that is likely. If you're asking marketers who constitute more than 30% of the demand for FX, based on a rough estimate that we did this morning, are asked to go and source for FX funds in the autonomous market. We think there's a likelihood for that, to really happen. I think it's a good long way in stabilizing the current, PMS price that we have, PMS price regime that we have at the moment, so that it won't be subject to too many volatility, because that will come from FX, most especially if the pressure in the parallel market is not checked.
Wale Olusi, thank you very much for your time today. We appreciate your contributions to the program over the last 1 hour. Do enjoy your weekend. This will continue next week. We'll see you then. Wale Olusi, research analyst at Afrinvest, an investment and securities trading firm here in Nigeria. You've heard some side of the conversation. The Nigeria Labour Congress and the All Workers Unions are meeting today. They will meet over the weekend as well. The conversation is going on. How will the Nigeria organized labor in Nigeria respond to the new guided petrol deregulation arrangement by the Buhari's administration? We have that to talk about on Monday. We'll keep one eye on the central bank. We're expecting April inflation data. We haven't seen the first quarter GDP numbers yet. Some companies are in arrears of their 2015 financials, especially in the oil and gas sector. We'll look at the 350 billion naira the Senator Udo Udoma, the National Planning and Budget Minister, says will be hitting the markets today, Friday. Let's see what happens. Sleep over all of this, folks, and let's wake up. Let's get back together on Monday morning, and we'll continue the conversation here. Find us on Twitter. You know what the Twitter handles are. Enjoy your weekend, and I'll see you again.